I'm live again. Welcome back to Strongman Personal Finance. Like, subscribe, tell your friends about me, post a comment below, hit the bell button for notifications. And if you have a question and you want an anonymous video, shoot me an email. I will look at your question. I will see if I'm actually able to answer it without getting sued. And then I'll make you an anonymous video. Okay? See what a great guy I am. And I don't even charge yet. Anyway, welcome back to Strongman Personal Finance. Now, I got another question on my email. I'm talking to this guy. We've been having some communications. And he basically sent me a bunch of stuff. But here's all the stuff I have in my Roth and 401k and yada, yada. And he basically says, he asked me, what do you think about my investments? Well, number one, I can't tell you what exactly to invest in, okay? I can talk about VT, which is the Total World Stock Market Index. I can talk about target retirement funds. But ultimately, it's up to you what you invest in. I can't tell you. Because if I told, you should buy Tesla, bro, and then you lose all your money, you can probably sue me, okay? I can just give you the knowledge and the tools to pick the best investments for you. Now, this guy sent me this email, and I was looking at the investments, so I'm going to look at it again. And basically, it just seems like there's a lot of stuff. Like, when you're investing, the key is simplicity. You don't want 20 different mutual funds or commodity indexes or all this crap. You pretty much want as few mutual funds as possible because you don't need a ton of mutual funds to have diversification. You need to worry about what is inside the mutual funds. Diversification is not the number of different things you have. It's what you have and what's inside the things that you have. For example, in case you got confused, when I talk about VT, I have the vast majority of my Roth IRA in VT. Maybe it's not appropriate for you, but VT is an ETF, and it basically tracks the performance of every freaking stock that is publicly traded in the world. So I basically have a partial ownership interest in every company that lists stock in the world, okay? Now, would you say that's diversified? I would say yes, okay? Every company in the world. How many mutual funds do I need? If I own every company in the world, I could literally just put all my money in that and I would be fine. So that's that. Now, if you're not a huge fan of the total world stock market index, and maybe you want, a little bit of small caps, smaller companies, maybe you want to throw in some real estate, okay, that's fine. But you don't want to have a ton of different things because you're just going to get confused. You can't have this massive portfolio and really understand what you're investing in. Because if you have 20 different funds and one fund's a large cap growth and one's a large cap, total large cap US, you have a ton of overlap. And it's hard to really understand what your actual strategy is with all this different crap. So the fewer funds you have, the more easy it is to track. And the beauty of, these broad indices is that you can own a ton of crap in just one product. That's all you need. So just looking at this guy's portfolio, it seems like it's a lot, okay? If you're happy with it and you understand exactly what your strategy is, that's fine. You can keep it. But if it's just too much and you don't really know what you're investing in and you don't know how it overlaps, just consolidate it down into a simple investment, like maybe a target retirement fund. You can have a target retirement fund and that's it. That's the simplest thing you can do besides VT. All right. That's the thing. You need to know what your strategy is. You need to have a strategy and you need to stick to it. That's the key. Let's say you want to hold the world at market cap weights. So basically, larger companies are more represented than smaller companies. That's it. If you want that, you can buy any kind of index like VT. If you want to just invest in US stocks and hold it at market cap weights, bigger companies get more representation, then you can get VTI. It's another ETF that tracks the total US stock market. Same thing for international. If you just want to all international, you could do VXUS. You need to have a strategy. You can also do equal weighting, which whatever, I don't do that, but it's possible. There's so many things you can do, but you need to keep it simple. Okay. So just stop. Stop with all this crap. You don't need all this stuff. Simple, simple, simple. It's more tax efficient. You know exactly what you're doing and you don't get overwhelmed. Now, I learned in the military that a person can generally track 4 to 5 different things at once and keep tabs on them. Anything more than that, and you start forgetting, like, you're trying to track this unit and this unit, and then you're like, oh crap, what is that unit doing? It's too much. So I would say a maximum of 4 different investments or investment vehicles total. Now I have 3 in my Roth. I have VT, Total World. I have a little bit of real estate, and I have a little bit of small cap value. And then when I eventually start throwing in bonds, I might actually dump the real estate because I don't want a ton of ETFs in my Roth. I have 3 right now, and maybe I'll dump it down to 2 when I'm older and I start throwing in bonds. It's going to be so easy to manage. I log in. I'm like, stocks have done well and bonds have sucked. Maybe I'll reallocate, sell some stocks and buy some bonds. And that's it. It takes one sale and I'm done. But if you have 20 different investments in there, you're like, well, this went up. Should I sell this to buy that and this and that? It's just too much. Okay. You're going to go crazy. Don't do it. That's it. All right. Any questions, please let me know. You can drop me a comment. You can email me. You can like the video, subscribe to my channel. Oh, wait. We got our special guest. I just 10x my money by investing with Jeremy. He's the hottest stock investor. It's Jeremy, man. Financial education. He's a financial advisor. Yeah. Anyway, this guy, Jay Nagy, subscribe to his YouTube, please. We do a lot of joint videos together. We're best buddies. All right. And you see that video with Jeremy he just put out? He put out another video about like the future projections of Tesla. You should check it out. But I think that's it for that video. Actually, Jay, if you want to message me, we can figure out if we want to do a live stream tonight. But that's it. Keep it simple, guys. Put all your money in tax advantage accounts, unless you want to retire before 59 and a half, and you'll be golden, okay? Keep it simple, stupid. That's it.